folks, it's Jim here from FX Charts, Friday, March the 1st, just with a daily outlook to see what's moving and potential trade opportunities for the day. If we go and have a look at the trend table to start off with, the biggest movers on the day really were the Aussie and the Kiwi, as I think we thought might be the case yesterday. While the longer term charts are still fairly neutral, the short-term charts do look pretty heavy, as I'll show you in a minute. So I think trading those from the short side remains the go. As we also said yesterday, gold and silver look heavy. The dollar elsewhere is mixed. Some decent German inflation data saw the euro go higher. The Swissy was strong too on the back of some geopolitical tensions, really the India-Pakistan situation. Sterling looks a little bit heavy in the short term, but I still think it's probably a buy according to the charts. And dollar yen headed higher after the better than expected US GDP data. And that looks strong, although it, once again I'll show you in a second, it is coming up against some serious resistance just here. Elsewhere, the crosses, sterling looks good on the crosses still. So pretty much the same as yesterday. We've got a heavy date schedule later on today. We've got a fair bit coming out of New Zealand. There's the Kaizen manufacturing Chinese PMI coming up later. And then we've got a pretty heavy session from the US with the PCE deflator being the main interest. But we'll go and have a look at the charts anyway. And starting off with the Aussie here, it saw a quick flick up to 71.65 yesterday, which we suggested was probably a bit of a sell area, which proved correct if you could get set. It was there very briefly. And since then, it mucked about and then headed lower once the US data came in stronger than expected. US bond yields headed higher and kept the Aussie under pressure on differential on rate differentials. So the Aussie's headed down to 70.90 or so, and I think it looks heavy. I think it's going to drift off probably to 70.70, and then we've got this level down here, which is sort of 70.30. Now we haven't been down there for a while, but it seems to be the neckline of a head and shoulders that seems to be building. So I don't think we're going to get down there today unless the US data is very strong later in the session. But we could expect a weak Chinese data reading. China does seem to be slowing. So we might see a test of this sort of 70.70 area. And if that was to go 70.50 and then down here to the neckline, the 4-hour charts are pointing lower. The hourlies also look heavy. So I don't see any real reason to change the strategy from being short Aussie. The dailies, though, are pretty neutral, so I wouldn't be looking for too much direction. I think there will be bids between 70.70 and 70 cents, but I don't expect to see it down there today, although I think that's the direction. Much the same applies with the Kiwi. I'll show you there. The Kiwi's come off. We're going to find support down around here, around 67.85.90. Currently trading just above the figure, but I think a break of that could then see us move down to the sort of FIBO support around 67.60, and below there then we're heading down towards 67.15, although I suspect that won't be the case for today. But once again, the 4-hour charts are pointing lower, and the dailies also may be picking up some mild downside momentum. So once again, looking to be short. We do have down below here, we have got this support, the 100 and 200 day moving averages are crossing at 67.50, so I expect that to be pretty strong support. We'll just take a quick look at the euro. It's not really it got up to 114.20, I think it was, after the German inflation data, but it's come back down now to the stronger US data. But really, as you can see, it's been very choppy for weeks now. I do like to be short the euro, but I don't think there's an awful lot in it. Dollar Swiss, that had quite a move lower last night. This was sort of really on the back of well, the India-Pakistan situation, and then the stronger inflation data out of Europe. But it's since bounced back, and as you can see on the daily charts, We did get down and tested the 200-day moving average. We actually come back and closed above the 100-day moving average. So that's potentially reasonably bullish. It needs to hold these levels, but really having taken out all the stocks below the 100-day moving average, we can now possibly head a little bit higher. Finally, with sterling, I kind of still like sterling. This is a daily chart, but leave yourself levels, room to buy on a dip. We could easily come back down to sort of 132 and a quarter, 132. We could even come back down to sort of these levels down around here, so 130, 170. I prefer to have sterling on the crosses rather than on the against the dollar. And if I go and just look at sterling Aussie, for instance, just give me 1 second here. It's taking its time. Right, so sterling Aussie, it's traded up above 187. It's been up to 187.23, but I kind of like the idea. I do think it's heading higher. The dailies are pointing higher, but the hourlies are now sort of running out of steam. So I would be looking to buy it down around these sort of levels. So don't rush in. 150, 185.80, possibly even getting down to about sort of 185 and a quarter or so. This high here should provide some support. So 185 and a quarter. That goes back to the middle of January. So I'd be looking to buy it there. But I do think that longer term sterling can head higher. And as I said before, the weeklies do seem to be building up some positive momentum, and we have taken out the 200-week moving average here. So once again, look to buy dips. Elsewhere, the only other thing that I've been looking at, stocks are pretty stable at the moment, so I'm not really going to delve too far into those. The S&P, the as they do look slightly toppish. I'm actually short the Dow, which it's doing nothing, but it does seem to me as though it's got some mild negative momentum. And the dailies do seem to be a little bit toppish. So I think on the basis of maybe slowing economic growth worldwide, we could see stock indices come under a little bit of pressure. But right now they're not doing too much. I prefer to look at the metals. Gold does seem to have topped out, and we've got, as I said yesterday, this bearish divergence. I kind of like it lower. Sell it at 13.25. Stop loss above 13.30. The same applies to silver as with yesterday. It had another down day. Right now, yesterday we were looking at selling at 15.90. It never got there. Got to 15.83. Possibly now look to sell it at sort of 16.75 with a stop loss above that 15.85 level. So yeah, sell it here. Maybe it doesn't even go above 15.70. I give it the benefit of the doubt though. Look to sell at 15.75, stop loss above 15.85, but looking for a run down to sort of initially 15.50 and eventually to 15.32. That's about it. As I say, it's going to be a heavy data schedule out of the US later on, so we could see some volatility. So just leave your orders in place, but keep stops there as well. And apart from that, have a good weekend, good trading, and talk to you next week. Cheers.